A few weeks ago, as usual, the vocal Cardano founder Charles Hoskinson reminded the community members to look out for a positive signal, reiterating that the protocol and its ecosystem is getting real adoption and growing as an ecosystem under the harshest conditions our industry knows. Here he goes again, the ADA coin price has not picked up, development has been crawling, and investor sentiment has been tainted, and Cardano is growing under the harshest conditions? What is this proof of its resilience, and where is this growth coming from? After a robust start to the year, the crypto market is now experiencing an upside momentum on the front of global macroeconomic situations and cooling inflation data. The global crypto market capitalization is trading at $1.19 trillion, and this increase is courtesy of high trading volumes. What's going on? The poster boys of the crypto market, Bitcoin and Ethereum, which showed incredible stability at the beginning of the year, have been trading in green with a marginal rise. Of course, experts have been upbeat about this move, anticipating the rally to become stronger in this half of the year due to more clarity on the macroeconomic conditions worldwide, and especially in the key markets of the US and the UK. Above all, the broader sentiment of the crypto market has shifted from neutral to green, with the world's largest cryptocurrency Bitcoin currently hovering around the much restricted levels of $30,500 after touching the $31,000 mark on July 4th. On the other hand, the world's second largest crypto, Ethereum, is doing well too. ETH is trading at the $1,900 level, which has marked its highest peak since August of 2022 after touching the level of $2,100 in April. This rally hit the market immediately after the successful launch of its hard fork Shapella, which is targeted at transforming the landscape of Ethereum and its applications. Now, Ethereum is trading at almost 1.2% down and forming a strong resistance at $1,900 levels. So what about Cardano ADA? Well, it is still stuck in the lows. The conditions in the crypto market seem like they're getting worse, even though several optimistic factors such as weakening dollar index and inflation tackling methods in the US have boosted the sentiments. The general crypto market, including Bitcoin and ETH, is showing slight positive signs of recovery. Moreover, the ceiling in rate hikes in the US and the epic story of the SEC Binance has put traders in a challenging situation. But now the crypto market as a whole is leading the path to the resistance before the high jump. It's only the sustaining factor that we cannot guarantee, since the volatility is the language here. So many things are choking the life out of Cardano ADA. We can still give the coin the benefit of the doubt, but the market is screaming a mix of bullish and bearish. We don't even know what to believe anymore. It's from one good news to a bad one, and the crypto market has been weighed down heavily due to widespread worries over the Binance changes and allegations made by the SEC and global inflation scenario. Up next is the Fed. The Federal Reserve, which kept the rates steady in the US in its June FOMC meeting, pausing the 15-month rate hike cycle, has pushed the dollar higher, thereby increasing the volatility in the US Treasury. This development led to more investors participating in risk-taking assets such as cryptocurrencies. Last time, the cryptocurrency market recorded some positive signs due to the ease in the macroeconomic activities, which ushered in the crypto price to rally. The reasons were largely due to the Federal Reserve's approach towards interest rates to evade recession or rising trust towards decentralized finance after the banking fiasco in the US. This happened around March, and the cryptocurrency market got immense support from such factors and boasted a positive outlook for the rest of the year. Also, there are currently high hopes on the return of monetary policy, which might include Bitcoin and other virtual assets, and may transform the minds of those regulators who are seemingly hell-bent on suppressing digital assets. In addition, there is a fundamental reason for the recent crypto mini bull rally, even though it is going back and forth. Bank contagion has resulted in heavy losses on various bond holdings, which has forced the Federal Reserve to go slow on rate hikes to combat severe liquidity issues. Higher rates have always weighed heavily on risky assets such as cryptocurrencies, as demand for such asset dampens when the rates increase. 2022 overall was a brutal year for cryptocurrencies, hence the emphasis on seeking solace this year, but the events of the year are still fresh in our memories. Due to massive global uncertainties and the FTX fallout, the markets were hit worse than ever before in 2022, but to a considerable extent, Bitcoin and other currencies are in a much better and pleasant situation. However, we should not be quick to forget that this is crypto, and it is definitely fickle. Undeniably, the crypto market appears to be recovering from the recent crash, but the sentiment of fear continues to wax stronger in the crypto community. Moving forward, as Bitcoin stays stuck around the $30,000 range, true optimists and the patience of the HODL crowd is being stretched thin. Alas, the road to broad adoption is longer and rougher than the perma-bulls had promised. Plus, macroeconomic factors may have slowed the process, but speaking of upcoming catalysts, the next Bitcoin halving event in which the rate of the miners will produce Bitcoin is reduced, thus constraining the new supply of cryptocurrency, is set to take place in less than a year. Past Bitcoin halving events have typically preceded price run-ups, but there doesn't seem to be much enthusiasm surrounding the anticipated 2024 event. With this, we're judging from a social media activity and review of recent financial press headlines. Well, the muted sentiment can be attributed to jitters over expected interest rate increases in 2023's second half. Somehow, financial market behemoth BlackRock, the world's biggest asset manager, doesn't seem overly concerned about Bitcoin's prospects despite potential macroeconomic headwinds. Labeling Bitcoin as an international asset, BlackRock's chief executive officer Larry Fink recently gave it a hearty endorsement, which generated a lot of buzz. Larry Fink noted that Bitcoin is not based on any one currency, so it can represent an asset that people can play as an alternative. As BlackRock has filed with the Securities and Exchange Commission to get a spot for a Bitcoin exchange-traded fund approved, investor interest is on the rise. The only real obstacle at this point is regulator pushback. Increasing adoption and a seemingly inevitable, if delayed, bona fide Bitcoin ETF will trigger the next leg up. So, according to experts, it is the right time to invest in Bitcoin, especially if you have faith that logic will eventually prevail and a Bitcoin ETF will not be only permitted but commonplace. The same decision can be replicated for Cardano ADA. If everything turns out well for Bitcoin, Cardano is in for a good ride, and other cryptocurrencies as well. We know there is little to no reason to like Cardano ADA. It has embraced dips as friends and is laced with outrageous slow pace of developments. Charles Hoskinson noted that Cardano has been growing under harshest conditions, which seems like a good explanation for its recent drawback. However, these conditions are not restricted to Cardano alone. Other cryptocurrencies are victims of the same fate. Cardano's troubles did not just start this year. Despite its innovative design and aim to redress scalability, security, and sustainability issues, Cardano has experienced a turbulent journey since its inception in 2017. For this reason, it's worth explaining the potential factors that can significantly impact Cardano's future growth and adoption, even though they are no longer appealing to investors. What is so special about Cardano ADA is now the raving question. Just as you know, the performance of Cardano is intrinsically connected to the overall conditions of the crypto market. In 2022, the crypto market launched into a downward spiral, majorly due to verging on bubble territory by November 2021, with an eventual correction being almost inevitable. Terra Luna and FTX and other significant crypto players collapsed and added to the downward momentum. Things were not looking pretty, and despite the downward trend, we see Cardano's resilience and its increasing efforts to innovate and develop its technology, which could significantly influence its future growth and adoption. Come on, we do gotta give it some credit though. The Cardano ecosystem has planned several protocol upgrades to make the blockchain more attractive to developers. Its first stablecoin JED went live this year, even amid fears that it could tread the same path as Terra Luna. The completion of the last stage of this roadmap, Voltaire, is fast becoming a reality, where Cardano will show other ecosystems how decentralization is properly done. Other projects, of course, are underway, and we should not expect less. So what about the ADA coin price? Well, we do believe that it could pick up from here. After all, things can only get better from here. But that's going to do it for today's video. So make sure to hit the subscribe notification buttons to stay updated, and we'll see you in the next video.